beating the drum on climate change as one of the most important topics and problems of our time, then he was going to have to face those sorts of concerns. I don't think he expected that. And now that he's sorting it out, learning more about the environmental impact, I think he'll come back into the mix. We certainly hope he will. I don't know if he's going to be part of the conference in July or not. He would be a very good addition, because I think he would provide both sides of the equation. How quickly could the adoption of solar accelerate if we introduce mining into that ecosystem?
Do you expect a Bitcoin ETF to get approved anytime soon? And I'm curious if you plan to launch a crypto ETF anytime soon.
You know, I think now that Gary Gensler is head of the SEC, he's Bitcoin friendly. We know that. He taught a class, courses at MIT before coming back to the SEC. So, and I think the research professionals at the SEC, they understand Bitcoin in particular, and I think are much more comfortable with it now that we've had several years to digest what exactly it is, go through a bear market, go through a bull market, now go through a bit of a bear market. I think watching the ecosystem evolve and actually become even more anti-fragile. You know, we're getting some real tests here. And if the system doesn't break, and I don't think it will, I think that their comfort will increase in a couple of ways. Number one, the infrastructure is there, is robust. Number two, the liquidity is there. I don't think that's going to be disproven here. And number three, the price is down from very lofty levels. So, hey, why not start an ETF after a correction in the market than before? So I actually think the odds are going up now that we've had this correction. I don't know if it's going to be this year or not. We hear perhaps fourth quarter, but you know, we heard third quarter before that. So as we get closer to the fourth quarter, we'll know how much is being pushed out.
Hey, I want to ask you a little bit more about Tesla. Obviously, you know, you've been out there front and center years ahead when everybody was turning their backs on Tesla, taking another hit. The news out of China, they have certainly had some tough time. Their growth has slowed substantially. They've had a lot of headaches and protests in Shanghai after some accidents with its cars. Is the Chinese market at risk for Tesla?
I think the China is going to favor its local producers like NIO and others, XPeng. And I think they're granting subsidies to NIO, which is the battery swap company, even on its very high-end cars, which they are not granting to Tesla. So it's obvious, and it has always been obvious, that China would favor a local producer. But what we are seeing from China, and particularly Tesla, is exports into Europe. Where it does not yet have a plant. And what we're hearing is especially in Germany, but all over Europe, where their standards are extremely high for cars in terms of design and performance, that they would prefer cars from Shanghai, which is a much newer plant, and much more productive, much more efficient in terms of perfecting these designs than is Fremont. And so I think we're seeing a big export market develop from China into Europe. And I think China will like that. China wants to be known not for shipping or exporting, you know, cheap goods, but also high-end goods. So this could be the beginning of a trend.
So is China at risk then for Tesla? I mean,
I don't think they're going to shut down the factory at all. I think that factory will be used much more for exporting than we once imagined. I will say that Tesla's cars in China have sold very well until very recently. I'm sure the publicity it has received has cooled Tesla's jets in China, but it's been fortuitous that this export market has opened up at the same time.
Kat, the one thing I want to ask you, and we talked about it at the beginning, inflation. Your mentor, you and I talked about this just a few weeks ago, Art Laffer, you were in your 20s, you were focusing on the economy. It was a time where inflation was off the charts and everybody thought it would consistently stay that way. Laffer thought differently, and we know, well known in the supply side economics. Here we are at another time where the markets, the volatility is often guided by our inflation expectations. Is inflation going to be a problem in your view?
Well, we've been saying for some time, actually since the depths of the coronavirus, we were doing YouTube videos saying regularly, V-shaped recovery, businesses are way behind consumers. Consumers are buying all of these goods. In fact, that's all they can do because they're stuck at home, right? So they were buying non-durable and durable goods that could be shipped to them, right?
Right.
Okay, that part of consumption is 1/3 of consumption, and a disproportionate amount or percentage of the market basket of consumers was in goods for the past year. Businesses didn't expect it. They were behind even before the coronavirus. They had been lagging in terms of capital spending, in terms of inventories. They were worried about inverted yield curves and China-US trade conflict. There were many, many concerns. So they had been dragging their feet. They got even further behind and still haven't caught up. So what's happening now? Double, triple ordering, maybe quadruple ordering, because they just can't get the goods.
Panic
especially
buying. We've been talking about companies panic buying too.
Panic buying. And so what I believe is we are setting up for a massive period of deflation. Now, let me explain that. There are three sources of deflation. One is when the orders, these double and triple orders, are canceled, right? Now, we have seen lumber correct 30% in the last week. I think this is the beginning of that. Copper is now starting to correct. And I believe that commodity prices went too far, too fast as businesses were scrambling and panicking, right? They were losing business to competition if they hadn't planned their inventories correctly. So that's one source of deflation, but that's only cyclical deflation. And we actually didn't expect it to start now. We expected it to start later in the year. But I guess it makes sense now that vaccines are here and consumers are shifting away from goods towards services or at the margin. The writing is on the wall. Those are double and triple orders are going to be canceled. Prices were too high, and we're probably going to see a drop in commodities. But there are two other sources of deflation out there, and this is what we've been saying for quite some time. One has to do with, it's a good deflation. It's caused by technologically enabled innovation. And we believe when you see DNA sequencing costs dropping 40% for every cumulative doubling in genome sequenced, or when you see AI training costs dropping 37 to 50% per year, these are massive deflationary forces that are going to hit every part of the economy. AI is going to be everywhere. So that's good deflation. Now, what's bad deflation? Bad deflation is going to hit those companies that are going to be disintermediated and disrupted by all of the innovation that we talk about all the time, based on DNA sequencing, robotics, energy storage, artificial intelligence, and blockchain technology. So companies who have leveraged up to satisfy short-term oriented shareholders who say, I want my profits now, I want my dividends now, so they buy back their shares, they haven't been investing enough in innovation. They are going to lose, if they're not lucky, if they are unlucky, they will lose their businesses.
So, Kathy, what I like about you is your consistency, and we have been talking about these themes, right, for a long time. Having said that, your performance has been really consistent. It's been a tougher year this year, and you've had flows out of your funds. I was tracking just, I think, over the last week, it's almost $1 billion. So, how do you keep your investors kind of energized in your philosophy and your thinking and your outlook and confident in your strategy, in a moment where there's a lot of doubt out there?
Yes, well, a couple of things just in terms of flows. Our biggest outflows were in March. There were a lot of commentators out there, shall I say, screaming about how ETFs would have to, or our ETFs would have to shut down, which is impossible. And they just don't understand the ETF infrastructure surrounding us. It's a beautiful thing, let me tell you. The flows are no problem. Our spreads have not moved. But anyway, beyond that, what has happened is our price targets for the next 5 years, that's our investment time horizon, have not changed, right?
At all. Not at all. Yeah.
In fact, some of them have gone up as quarterly results have come out. Now, they're not going to change that much because that one quarter's result is not going to change a 5-year price target by that much. But the forces that the coronavirus put in motion, supporting all of the innovation that in which we invest, they are not looking back. And so what we are seeing is, a 30 to 40% discount to peak prices in February for the same price targets. So we're looking at this saying, all right, on sale. Innovation is on sale. And oh, by the way, the bull market has broadened out. It is now embracing value and more cyclical stocks. So what has happened is the bull market has broadened, has strengthened, and that is usually a launching pad for our next move up. This happened, if I can just say, 2016, same thing. Fourth quarter of 16, after Trump, against all expectations, was elected, value stocks took off because we're going to have a big cycle, tax cuts, right? And our strategy went down. We were negative. But what happened was 2017 was one of our best years ever, save last year. And that's because the bull market had broadened out, included value, cyclicals were taking off, and the economy was on the mend. Our economy is very strong right now, and cyclical earnings growth and revenue growth is a competition to innovation. But if we're right on what's happening with commodity prices right now, and that's going to be extended, that is the ticket to the next move in our kinds of stocks.
Well, it's interesting, too. What about, though, the tech underperformance, Kathy, that we've seen? How much longer do you think, we see that?
Well, you can never say when we've hit bottom. I mean, I can tell you that the valuations in our portfolios would suggest that over the next 5 years, again, if our research is correct, no promises, we believe that our portfolios will more than triple over the next 5 years. So that's more than a 25% compound annual rate of return over the next 5 years. Actually, it's approaching 30 after today. So, I'm looking at that with great confidence because these innovation platforms have hit escape velocity, and there is no turning back. There is no turning back.
And that, of course, was Kathy Wood, founder, CEO, and chief investment officer of ARK Investment LLC, those ETFs that we've all been watching for years that consistently really have outperformed the market. It's been a little bit of a tougher year, and we certainly have seen the assets come down in her ETFs, but really interesting.
Talk about timing on your part, by the way. Look, I know this interview was long in the works, but there's not a better day where you could have had her. We had tech sell-off earlier in the day, broad sell-off, and then, of course, the broad sell-off in cryptocurrencies. I was really interested in what she had to say about Bitcoin, the idea of, look, she didn't know what the bottom would be, and when you were interviewing her, it was at $35,000, so it hadn't even reached, it had come off the bottom, the lows of the day, and it's higher since, but capitulation.
Yeah, exactly. And sometimes the market gods just kind of rain on you, or shine down on you. Hey, listen, one thing we wanted to say, because she did mention at the end of their interview that she said that they've not had 1 month of redemptions, that the ETF platform had, if you go month end to month end, which is how they measure that sort of thing, their redemptions in March were 500 million, that they've had positive flows in April, May. It remains to be seen. She says it's been nip and tuck, and it may end up being a small amount depending on what happens in these last few weeks. But she says, You'll know if there's real capitulation. Sure, we could have a big outflow, but I think that's capitulation. That's something, the word you and I, that really stuck with us.
Yeah, it did. And look, this making the rounds on social today, Carol, I was watching it and people were tweeting about it. Everyone wants to know what Cathie Wood has to say.
Yeah, exactly. And it was nice to have a nice chunk of time for her to explain her thinking. Listen, she's sticking to her guns, and this is her way of thinking on the outlook. It's longer term. So listen, check out more. You can go to Bloomberg.com, BloombergLive.com for that interview. This is Bloomberg.
Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
Dave Wilson, slow your roll. We haven't even done today's chart.
Okay, fine.
Oh my God, he's
Dave's in the studio
Fine
with
and
us.
dandy.
He's excited about tomorrow's chart already. We haven't even done today's chart yet, Dave Wilson.
Exactly. All right, we're going to get to Dave Wilson in just a moment. In the meantime, back to Charlie Pellet. Check on that trading day. Just about a half an hour to go in today's trading day.
Indeed, and I'm excited about what's going on. We have got 28 minutes to go with the Dow, the S&P, NASDAQ, all on the minus side. Wild day, and that's what we do here at Bloomberg. We love days like this. Stocks are dropping, Treasury yields rising as minutes show. Fed officials are cautiously optimistic about the U.S. recovery at their April meeting. Some signaling they would be open, quote, at some point to discussing scaling back the central bank's massive bond purchases. Here's where we stand. We've got the S&P down 26, a drop of 0.6%, down 278, down 0.8%. NASDAQ down 39, a drop of 0.3%. 10-year yield 1.67%. Gold down $1.13 right now, 18.68 the ounce, down 0.1%. West Texas Intermediate crude dropping 3.2%, 63.39 a barrel. Lots of major stories today. Bitcoin whipsawing investors with a same-day plunge and a rally of 30%. Right now, looking at Bitcoin, 38,421. We have got Bitcoin though down now by 11.3%. Again, the S&P 500 index down 0.7, NASDAQ 100 down 0.2, Russell 2000 down 1%, Dow Transports down 0.8%. To put today's moves in perspective, at 1 point the Dow is down 1.7%, now down by 0.9%. Website hosting service Squarespace, the ticker on that, SQSP, it is down about 13% in its trading day. Beginning today, vaccinated New Yorkers can shed their masks in most situations. Restaurants, stores, gyms, and many other businesses can go back to full capacity if they check vaccination cards or apps for proof that all patrons have been inoculated. As life returns to normal around the country, lots of questions about school reopening and vaccinations for children. Lauren Sauer is an assistant professor of emergency medicine at the Johns Hopkins Bloomberg School of Public Health.
We also don't know what long COVID looks like in kids. So kids who may not have acute infections really bad may still have lasting impacts from the disease. And that is one of the big things that we're looking at now on the science side, so that we move to protect kids quickly.
The Johns Hopkins Bloomberg School of Public Health is supported by Michael R. Bloomberg, founder of Bloomberg LP and Bloomberg Philanthropies. Among some of the vaccine stocks that we track, Pfizer shares down 0.8%. Its German partner BioNTech, the ADR is up 1.5%. ADRs of AstraZeneca up 0.4%. Moderna out of Cambridge down 1%. J&J Johnson & Johnson down 0.6%. Recapping, Bitcoin down by 11%. S&P down 27, a drop of 7 cents. I'm Charlie Pellet. Bloomberg Business Flash.
It certainly is. Thank you, Charlie Pellet. Bloomberg Business Week brought to you by BNY Mellon's Pershing. To learn why Insight is the essential event for the financial advice community, register now at bnymелloninsight.com. Starts June 8th. This is Bloomberg.
Would have a shot at it, Tim. That's
I
sort of
did.
like
late
no.
90s, late 90s, early 2000s.
I mean, I've made this point before
I'm out of
you
here.
know.
I'm done.
This
I'm
is my
done.
vintage.
Carol, please. You know,
Please, Dave.
Fleetwood Mac, CCR, sort of classic rock.
I was a kid. I was growing up with older siblings.
Absolutely.
Jeez.
I mean,
Tough
you would have
crowd,
no
man.
problem with that.
Okay.
Tim, I'm figuring, you know, a little bit
apologies to Chris.
younger, you know, familiar with those
Yes.
90s rockers like Creed. Man, I mean, I know musical tastes do cut across, but, at the same time.
You're digging a hole, Wilson. Go ahead. Get yourself out of it.
Well, I've dug the hole, so let's try and climb out of it and talk about quality. The question of going higher, which is one that Morgan Stanley brought up the other day in a report. Mike Wilson, who's their chief U.S. equity strategist, saying it's perhaps time to, as he put it, go moving up the quality curve. Now, there are any number of ways to define quality, but you're really talking about the business and the finances, whatever criteria you use. And Morgan Stanley actually has this index that goes through the Russell 3000 and pulls out the companies that best fit in terms of high quality and low quality, and then puts together an index that basically plays them off against each other. So, favor the high quality stocks, bet against the low quality ones. Let's just say that has not been a winning trade for a while. I mean, from the lows of March last year to this past March, you saw this index go down 58%. I mean, it was basically everything was going up, so you might as well buy, the companies that weren't in such great shape so you could get more bang for your buck. But that has started to change in the last couple of months. And the way that Wilson figures it, we're kind of getting beyond the point where you just started an economic expansion. It's this phrase mid-cycle investing and referring to the economic cycle. So he figures maybe now is the time to move into higher quality, as people have started to do in the last couple of months.
But is this part of the growth versus value debate too? Because when you think higher quality, you think of those companies that are the ones that are necessarily more, higher quality. They're the ones on more financially sound footing, not necessarily companies that are still losing money, but are the growth stocks.
It certainly does play into that to some extent. It's just a matter of, what's your starting point. Quality is one of what they call factors that people focus on, factor investing. Growth and value, other examples of factor investing, small cap versus large cap. I mean, there are any number of criteria you can use to slice and dice the market, and to some extent they overlap. So, your point is well taken. I mean, that said, the focus here is on quality.
Well, and the thing is, right, when we're seeing an economic recovery, you can kind of throw money at almost everything, right? And especially the companies that benefit from the reopening, but you really can throw money at a lot of things. And then as it starts to work its way, you've got to be a lot more selective.
Yeah, absolutely. And that's the point here as much as anything. Real quick, haven't seen this chart, get me an email. You'll get everything I do. It's dwilson@bloomberg.net. That's dwilson@bloomberg.net. And a quickie on my stock of the day.
Wait, you're going to throw that in? I was going to say it's kind of like a mug or a T-shirt. We're going to throw in the stock of the day.
Absolutely. Rihanna Pharmaceuticals. Shares up about 23%, biggest gain in 6 months. U.S. regulators were planning to meet with them, and they basically said, we should change the focus on the meeting, maybe talk about what it would take for you to be able to apply for approval of a drug for a genetic disorder. And people like that idea.
Ring. What's the ticker?
RETA.
RETA. Okay. RETA. I haven't heard of that one. Good stuff, Dave. Sorry, I'm just looking it up on the Bloomberg. Still down about 17%, but yeah.
Yeah, $3.7 billion company, though, which is not shabby.
Exactly. Dave Wilson, thank you as always. Despite the diss, I still love you. All right, let's get a check on world and national news.
Good. Nancy Lyons in D.C. Hey, Nance.
Hey, Tim. The UN says it is seeking $38 million to respond to the immediate needs and to carry out essential emergency interventions in Gaza. Stefan Dujarric is the spokesperson for the UN Secretary General.
We want to see a stop of the fighting immediately. There needs to be a halt to the aerial attacks, to the rockets, to the artillery strikes going from one side to the other.
Dujarric says the $38 million will support up to 50,000 individuals over 30 days. President Biden has had another phone conversation with Israeli Prime Minister Benjamin Netanyahu and has told him he expects significant de-escalation by day's end. But Netanyahu says the airstrikes on Gaza will continue until Israel's goal is achieved. He says that goal is to restore quiet and security to the citizens in his country. President Biden and Senate Republicans have a greater than a 50% chance of striking a deal on infrastructure. That's the view of the GOP's top negotiator. Senator Shelley Moore Capito tells Bloomberg the next 2 weeks are crucial. She says the big question is how to pay for it.
We are looking at some kind of financing authority, revolving fund, infrastructure bank to be able to give us the longevity and to fill the gap that we have from the gasoline tax, because that's a declining resource.
Capito says she and other Republicans did meet with administration officials yesterday to discuss a revised Republican counterproposal, but she doubts a bill can make it through the House and Senate by July 4th deadline. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries.
All right, you're listening to Bloomberg Business Week. Carol Massar, Tim Stanovic. We've been featuring interviews from the week-long live virtual event called The Business Week. It goes hand in hand with the current issue of Bloomberg Business Week magazine. And among the speakers today, it was all about finance and the economy, and that included our Mike McKee catching up with the Atlanta Fed President Raphael Bostic. And while it's not yet time for the Fed to begin withdrawing the monetary policy support put in place to cushion the U.S. economy against the virus, that's exactly what Mr. Bostic had to say. Check it out.
There's definitely going to be a staring contest between you and the markets, given the volatility and the uncertainty you're talking about as we get data points over the next couple of months. And I'm wondering, with your new framework, can the Fed resist market pressure? I'm sure you'll say yes, but the markets remember December 2018 when we had the Powell reversal.
So all I'll say is yes. My job is to look at the data as it comes in, collect as much on the ground intelligence as possible, and then make a judgment about where the appropriate stance of policy is. If we see that substantial, significant progress towards our goals, I'm going to be advocating for us moving policy. Now, we are not there right now, and I want to emphasize, no one should take this as an expectation that I'm advocating that we move our policies tomorrow. We're still 8 million jobs short. We have not had the sustained level of inflation above our target that we are looking for, but I'm paying attention, and because this is such an unprecedented time, I'm going to try to be as prepared as I can for whatever happens coming down the road.
All right, and that, of course, was the Atlanta Fed President Raphael Bostic talking with our own Michael McKee. They were doing that at the live virtual event, the Business Week that's happening. And listen, this is kind of interesting to hear what he had to say. We had the FOMC minutes coming out. That was from the April meeting. And one of the takeaways, some Fed officials favoring taper talk at upcoming meetings.
Yeah, that was certainly one of the headline and one of the big takeaways. Remember, this happened before we got that CPI data last week.
Right, exactly. The inflation data and that surprising jobs report. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
Session. Stocks lower, but let's put the numbers in context. S&P now down 31, down about 0.8%. At the worst level of the day, the S&P have been down 1.6%. The Dow have been down 586 points, down 1.7%. Right now, the Dow is down 320, down 0.9. NASDAQ down 75, a drop of 0.6%. Fed Wednesday, 10-year down 11.30 seconds, 10-year yield 1.67%. Stocks dropped, Treasury yields rose as minutes showed Fed officials were cautiously optimistic about the U.S. recovery at their April meeting. Bitcoin now plunging 9.1%, 39,315 on Bitcoin. Website hosting service Squarespace now falling 11% in its trading debut after opening at $48 a share in its direct listing on the New York Stock Exchange. Gold up 32 cents the ounce, little changed at $18.69. West Texas Intermediate crude down 3.2%, $63.39 a barrel. So again, recapping, volatile day for Bitcoin, plunging 9.1% right now, have been down more than 30%. S&P down 32, a drop of 0.8%. I'm Charlie Pelletats, Bloomberg Business Flash.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no.
Who's gonna drive you home?
Honey, please, I'll do the driving.
Drive on.
Excuse me, I want to drive.
Just drive, baby.
It's the question that drives us.
This is the Drive to the Close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
All right, just about 10 and a half minutes left in today's trading session. It has been quite a day, and I feel like there's been a couple of major themes today. Certainly cryptocurrencies, Tim, no doubt about that. Watching the equity trade and watching some selling pressure earlier on were off our lows of the day. And then you had the Fed minutes.
Yeah, the Fed minutes, really, I think the big takeaway from those was, well, the timing of them and the fact that they came, that the meeting was actually before the CPI data that we got last week, and also the brutal jobs report for April. But there was concern that inflation, at least in the short term, could be pushed up by supply constraints.
And even maybe favoring some taper talk at upcoming meetings. And that was before, as you said, those surprising numbers. All right, let's get to it with Ernesto Ramos. He's Chief Investment Officer of the U.S. at BMO Global Asset Management, on the phone from Chicago. So, Ernesto, good to have you here with Tim and myself. On a day like today, what is it that you ultimately, if you had a major institutional investor talking to you and saying, what do I need to know about a day like today? What do you say to them? Because you can have your pick of major stories.
I think the inflation story is certainly something that we're paying a lot of attention to because there's the yin and the yang. You get the strong inflation number. You see all of the things that are moving higher, like commodities, but then you also have the weak labor market numbers, and so we're paying a lot of attention to inflation because even at the grocery store level, at the clothing level, my wife, who's a great indicator, tells me that things are really moving higher and have been moving higher for the last few months. So we're paying a lot of close attention to inflation. But the real theme that is important here is that stay focused on not overpaying for stocks. And right now, you saw the junk rally or the junkier part of the market that was the value market, airlines, hotels, and all of that go up very substantially. But now the market is shifting towards rewarding what I call quality value companies that are profitable, that have good business models, but that are trading at a significant discount. For example, an AutoZone, which trades at about 18 times earnings, but has been profitable forever, has bought back 90% of their stock in the last since 1999.
So is it a buyback play or is it really fundamentals?
It's fundamental. Their growth is phenomenal. I mean, it's steady growth. It's not phenomenal growth as in they're growing 30% every year. But look at all the trends in the market. The used car market is growing ballistic here. The prices of used cars are going higher, which means the demand is very strong. They obviously cater to that market. New cars are suffering from the semiconductor shortage, so there's not as many new cars. People want cars because they want to get back to driving after COVID, so they're going and buying used cars, and they're going to benefit from that. So all kinds of trends are in their favor, except they're not a sexy stock. They're not a thematic stock, and so people are not paying a lot of attention. But they're if you look at their chart, they're having a little weakness right now, but they have been moving higher pretty steadily.
So AutoZone one, give me another example of one of these quality value stocks that sort of fits your definition.
Well, the financials. I mean, you look at a company like Citigroup, and now the financials are finally having their day in the sun. But I mean, Citigroup trading at less than 10 times earnings. JP Morgan, not as quite as cheap, but they're still doing great because in a higher inflation environment, where the Fed is anchoring the low end of the curve down, their net interest margin with the steepness of the curve goes through the roof. They do very well. Economic activity picking up. That's also very favorable to them. And so they're in the right spot. And you name the financial, the big bank financial, and they're going to be fine. Waste Management is another company. It's not as cheap, but very steady, very good, high quality, profitable company, just steadily going up. And so all these companies that are not in the sexy part of the market, the growth part of the market, the high tech and whatnot part of the market, this is what we believe is the right time for them to take the lead in the market.
If I may jump in for a second, for how long do you do that trade? Because don't I want to ultimately, as an investor, be in the growth area of the market? If I believe with conviction that the growth area of the market is where the growth will be for years, even if it gets a little heady now, do I really care what happens over the next 6 to 12 months? What I really care is where we are 5 years from now.
Absolutely, and the question is, how much are you willing to pay for that growth? And there's nothing wrong with these, the Microsofts of the world, the Apples of the world. There's nothing absolutely wrong with them. Tesla, it's incredibly thematic. It's incredibly based on the personality of one man, and he's a genius undoubtedly, but it's priced beyond belief. So you want to own those tech companies, but right now they're priced too expensively for us. So there's a price for everything, and right now we think that a lot of those tech stocks are priced beyond what you would want to pay for them. So focus right now on what's underpriced, and this is quality is cheap right now, or what I call quality value. So focus on that right now. There will be a time after we have more of a continued correction in technology, where technology will become the right place to be. I'm not saying sell out of all your technology, by the way. You want to have allocation to every corner of the market, but you want to be shifting money right now more to the quality value part of the market at the expense of the more expensive growth part of the market. I mean, I know you just had Kathy Wood. The kinds of companies she owns, we think, are not poised to do so well for the next few months because of valuation mostly.
She's, of course, got her 5-year time horizon for those companies, and that's an expectation that she sets. It seems like very clearly every time we talk to her. Ernesto, I want to go back to what you said about inflation, because that is like over the last 2 weeks. This is something that we've been talking about a ton.
No, not at all.
Well, especially with the data that we got last week, I think it obviously really scared a lot of people. And I do wonder to what extent you think it, and I hate to use this term, but transitory.
But it was weak for good reasons. A lot of people are just not willing to go back to work for whatever you want to call it, being paid to stay at home or health concerns or whatever. But there is a very tight labor market, so that's part of the story there. And so, but we think the economy is in a very strong track right now. We're probably going to hit over 10% growth for the second quarter GDP growth. So we're on a strong track. Now, there are pockets of concern, but we have to be watchful.
All right, Ernesto, we're going to leave it on that note. Thanks so much for your time today. Ernesto Ramos, he's Chief Investment Officer of the U.S. at BMO Global Asset Management, on the phone from Chicago with us. So watching the markets, quite a day. Crypto was a story. The Fed minutes were a story. Retail was a story. It's really going to set us well for tomorrow's trade to see where we go. We are focusing, though, and getting near our highs of the day when it comes to the the equity trade, Tim.
Yeah, we certainly are. Quite the difference that just a few hours makes.
Yeah.
With a day like today.
Exactly. If you blink, you kind of miss something. Coming up next, we're going to be joined by our Bloomberg TV team for Beyond the Bell, live on Bloomberg Radio, Bloomberg TV, and on YouTube, counting you down to the close.
Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostic, Taylor Riggs, and Kaylee Lyons counting you down to the closing bell. And here to help take us beyond that bell, Carol Masser and Tim Stenovic bringing together our Bloomberg television, radio, and YouTube audiences, parsing the crucial moments of the day. And Carol, I really appreciate you taking time from your bartending gig to break down what's happening today. But you got to talk. You were interviewing Kathy Wood earlier today.
I was.
And I mean, you had sort of your finger on the pulse of what was going on. What did she tell you about today's moves?
I'm not just making drinks with the star of Outlander, but I also did talk to Kathy Wood. Listen, she is staying true to her conviction. She still sees Bitcoin going very higher from here. What's interesting is, listen, she's got her plays. She sees it as a market capitulation that maybe is happening right now. And there's a lot of market watchers who are saying, well, maybe now we created some entry points for some of the different asset classes, Tim.
Yeah, they say timing is everything when it comes to markets, but I say timing is everything when it comes to that interview you had with Kathy Wood, because there's pretty much no better day to get to talk to her, because cryptocurrency, obviously a huge focus today. At one point, Bitcoin was down more than 30%. Before recovering quite a few of those gains, it was an absolutely wild day in the crypto markets, and also we saw quite the sell-off in equities before quite the bounce back a little later in the day.
Yeah, buying the dip seems to be a thing today, Tim. And I have to say that if there is an asset that can swing $10,000 in a single day, maybe it's not all too unrealistic to expect that maybe one day it could indeed reach $500,000, Taylor.
The best note I read from Cornerstone Macro saying that the direction of these spillovers does imply that a crypto crash may spell wider pain for the broader financial markets. That was the key question with financial markets in the red.
Well, you guys are talking about some of the buy the dip action going on in cryptos, but we're seeing buy the dip happening right here in equities. A huge sort of leg up here for the NASDAQ 100, which looks like it's going to finish in the green. The NASDAQ composite basically on the day right now. The S&P 500 looking like it's going to finish up down about 0.3%. The Dow Jones Industrial Average 33,900 right now on the screen, down about 0.5%. The Russell 2000, that's also your relative laggard here, down about 0.8%, Carol.
Well, pretty remarkable, Romaine. You talked about us finishing kind of at our highs of the session. This is after Tim mentioned the Fed minutes. We did see stocks move down after the Fed minutes were released. We saw yields moving up, maybe a little bit of a mini taper tantrum or so, as the Fed seems to be looking at asset prices and also maybe starting to think about, Taylor, talking about when they start to move back on all of this easy monetary policy.
Let's take a look at some of those asset prices. Caroline usually nails it every day with GMM. She's out today, so we're going to switch it up and do Crypto Go. That is the best thing about the terminal. There's a function literally for everything. In this case, all of the cryptos that you need to follow. The only thing I'll highlight for our radio audience, everything's in the red. That's all you need to know. The camera's going to follow me. Bear with me here. The only thing that I love on this screen as well, the 30-day range. In a matter of 2 days, everything has gone down to the very low end of that 30-day range. Unbelievable.
Yeah, amazing moves. And let's talk about some of the gainers today. Really, a lot of it was earnings related, and let's go through it. Target up about 6% here. Huge first quarter comp sales beat. Huge performance. First quarter sales soaring, you guys. Expecting a more profitable 2021. Romaine, I found that interesting that they were giving visibility about what they expected.
I'm actually surprised at how aggressive some of these guidance we're getting out of some of these retailers.
Yeah, exactly. And it tells us a lot. We'll see whether we continue to hear that kind of upbeat outlook. Got to mention Take-Two. We were breaking it down after the close yesterday, up 7%, up the most in 10 weeks, again, an EPS sales beat. Also, analog devices, love to watch the chip sector, earnings, EPS, and outlook beat. And then Marvel, not the Avengers, not the superheroes. We're talking about another semi-device company. Citi making it its top semi-pick, and that stock was up about 5% here today.
Yeah, I was watching crypto-related companies on the decliners today because anything that was crypto-adjacent fell, though recovered much later in the day. Let's start with MicroStrategy, finishing the day down by more than 6.6%. At one point in the day, it was down more than 15.5%. This is a business analytics company, but it has billions of dollars of Bitcoin on its balance sheet. Michael Saylor leading the company there. Coinbase finishing the day down close to 6%. At one point in the day, guys, a similar theme to what we saw with these other companies, down by nearly 13%. Tesla, this is an interesting one. one, finishing the day down 2.5% to its lowest levels since March 8th.
Those are some ugly numbers on Coinbase and particularly on Tesla at 536, given where it was. And Tesla's not just off today because of crypto.
Exactly. It's off because of concern over China. We got some data from China that there's slowing growth, and that's such an important market to the company, Carol.
Well, Kathy Wood not worried about that either. That's been a big bet for her as well. She's talking about how they're expanding into Europe as well. But we got to talk about crypto, guys. Let's talk about it a little bit more, because when we saw that plunge across the board in terms of all the cryptocurrencies, we were talking about wiping hundreds of billions of dollars off digital tokens overall. And Taylor, you look at the numbers. I mean, we were whipsawed today.
What is the path to Bitcoin to 500,000? Do we have it?
Well, how about
tell me really Carol? What is the path to get there?
I thought what was interesting is Kathy said specifically that we've got now about 19 million Bitcoins out there. We're going to top out at 21 million. Guys, it's basic supply and demand, economics 101 to some extent.
But there's a volatility issue here. And I mean, right after you had your interview with Kathy Wood, I interviewed the CEO of Binance US. This was a cryptocurrency platform that was actually down, or at least it was having trouble sort of facilitating some of these orders today. And I just wonder, sort of, for something that's supposed to be so valuable, how can it be so unstable?
Well, and why is it valuable, Romaine? My thing is still all about the use case, because of course, part of this volatility was inspired by the fact that the PBOC said, hey guys, you can't actually use this as a currency. But were you ever supposed to use it as a currency, or were we treating this as a store of value?
Kaylee, you make a really good point. It's a question that we asked Chipotle's CEO just a few weeks ago. I mean, are you going to start accepting Bitcoin as payment for Chipotle? He had that reaction, Romaine. He pretty much laughed at me. He kind of laughed at me, but it's a real question when you have a
laughed at you. It's unstable. But if you stabilize it, then sure, you could spend on it.
But what would Michael Saylor say about that? Until a few weeks ago, or until last week, Elon Musk accepting payment in cryptocurrency and Bitcoin specifically for Tesla vehicles. And I think a day like today says, wait a second, if I'm a company that is considering accepting Bitcoin as a form of payment, do I really want to do that?
We've talked about crypto, we've talked about Tesla, and I think that sort of brings up the broader theme of where we are in terms of correlations. I was reading a note here, of course, Cornerstone Macro, saying that the hedging value has been deteriorating over time. With Bitcoin, you wonder what it means for the correlations, Carol, the broader markets. They're saying that the direction of the spillovers, given it's such a high beta asset, does mean some wider financial pain, and you wonder if that was indeed what we saw today, given is Tesla a crypto play or is Coinbase the crypto play?
I thought Tesla was a car company. Wait, I forgot.
Energy company.
Well, it's an energy makes batteries. And listen, their crypto holdings are a small part of what ultimately makes up that company. I think we have to think about is watch the financial establishment, how they continue to increasingly embrace cryptocurrencies. If they start to back off, then maybe we start to look at this in a different way.
Well, and I also want to talk about asset prices broadly, because we had both the ECB and the Fed today saying in their respective minutes and financial stability report, hey, things are looking frothy and exuberant. And I look at crypto and I say, well, they are.
Just real quickly here, we are getting some earnings here. Remember fundamentals, guys? I know, Taylor, you're into those types of things.
What's that?
Cisco Systems, these are easy for me to say here. Those 4Q numbers coming in. This is their outlook here. They're seeing revenue at 6 to 8%. That's the range given. The street was looking for an average of about 5.6% here. So coming in with a pretty decent guidance. But those 3Q numbers are giving people a little bit of a pause here. I'm just going to give you a couple quick ones here. 3Q revenue, $12.8 billion. The street was looking for 12.6, and adjusted EPS coming in at 83 cents. The street was looking for 82 cents. So a beat here, but maybe not a big enough beat here. Maybe that's why you're seeing the shares down about 2% in post-market trading.
Yeah, 2 to 3% now, trying to find a range, of course, Carol, as we figure out where the market is going to go from here. I think Kaylee brought up a good point with the other big story of the day is all about those Fed meeting minutes. And I thought we weren't even close to talking about tapering. And today you saw that push forward of some participants might start talking about tapering soon.
Are we whispering
Ellen Zentner,
exactly.
economist at Morgan Stanley, killing it.
It's like, hey, honey, I'm thinking about doing something, but I'm not quite there yet. I mean, this is kind of how the Fed does it.
But Carol, right after the interview that you had and then I had, then Mike McKee interviewed Raphael Bostic. He kind of seemed to throw water on this idea that the Fed would move quicker than what everyone seems to think they would. There was a lot going on, by the way, at that Bloomberg Business Week conference, by the way. If you haven't checked it out, Carol, she makes a meme. What were you making, a Manhattan?
What was I making? An old-fashioned. An old-fashioned.
This is what she gets to to do all day. She gets to make drinks.
I work really
She gets
hard.
the fun stuff.
She gets all the plumber stuff.
I work really hard. No, but listen, I do wonder, Fed's Bostic, saying about being nimble. The Fed needs to be nimble. And I wonder if now this is, we have transitory and now we have to be nimble, whether we're going to start seeing kind of these different words, Tim.
Yeah, and the important thing to keep in mind is that the minutes were from a meeting before we got that jobs report just a couple of weeks ago that really concerned a lot of people about the pace of job growth and also the inflation data that we got last week. So important to keep that in mind.
Yeah, we're starting to see downside surprises on the economic data, and the Citi U.S. Economic Surprise Index is about to flip back into negative territory. Our colleague Joe Reisenthal pointing that out in his Odd Lots column on the Bloomberg today. I'm sure he's going to talk about and what'd you miss.
Who's that guy?
He's got his own crypto now. Does he even talk to us anymore? I'm just asking.
I think it went bust already, by the way.
All right, well, cheers. It's been quite
This
a day.
has been fun.
A
Absolutely.
dram of
What's in there?
coffee.
What's inside
No,
that
it's
cup?
coffee. It's
Okay.
a cappuccino
Oh, sure.
for everyone.
Likely story.
All right, that's going to do it for our cross-platform coverage on Bloomberg Radio, Bloomberg TV, and YouTube. We'll be back again same time tomorrow.
This is Bloomberg Business Week with Carol Masser and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
So Tim Stanovic, after a day like today, I am very curious what tomorrow will bring because we had so many different focal points of the market and it was fairly orderly, except for crypto was quite a whipsaw.
Oh, I don't even know. I mean, it's like
Everything else
if you wanted a chance to buy the dip, it seems like you kind of missed it.
Well, right. But if you did buy the dip, I mean, voila. What a bounce back.
80% decline at one point.
Yeah, it's pretty remarkable. And we're continuing to focus on, Fed earnings. That's kind of the market environment we're in. You ready to go home?
I'm ready. This was a day, as they say.
A dram of coffee for you as well.
Oh, thank you.
Or maybe water. That's a little bit safer. All right, Tim Stanovic, thank you so much. Let's get back to world and national news. Over to Nancy Lyons in D.C. Hey, Nance.
Hey, Carol. Well, the House is voting this afternoon on whether to establish an independent commission to investigate the January 6th attack on the Capitol. The top Republican in the House, Kevin McCarthy, says the investigation isn't broad enough and could hamper the federal investigation. Today, the top Republican in the Senate, Mitch McConnell, said he, too, is against it.
I've made the decision to oppose the House Democrats' slanted and unbalanced proposal for another commission to study the events of January the 6th.
McConnell says such an investigation is unnecessary since he says there are already robust investigations underway by the Justice Department and congressional committees. Democrats say the commission would be modeled after a bipartisan recommendations to prevent another attack on the Capitol. Former President Trump is describing the New York probe into his organization as a corrupt investigation desperately looking for a crime. New York Attorney General Letitia James announced last night her civil probe into the Trump organization has morphed into a criminal matter. Bloomberg Government's Emily Wilkins reports this just adds to the legal pressure for the former president and his businesses.
It's not just the New York Attorney General, it's also Manhattan officials that have been looking into President Trump's companies, have they lied to get various discounts from state and local officials?
And Wilkins says, don't forget, Trump is also an investigation in Georgia for his contacts with state officials to try to change the outcome of the November election. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
All right, Nance, thank you so much. Carol Masser joining me right now is Charlie Pellet. Charlie, I had to do a little bit of an audible here because this story is trending high among the most read on the Bloomberg, and it talks about how dozens of consumers who were scammed by Elon Musk, impersonators taking advantage of the recent cryptocurrency mania, are begging the Federal Trade Commission for help in getting their money back. They lost a lot.
It's going to be very interesting to see how all of this plays out because the FTC asking cryptocurrency folks to get the money back, it's tough to track cryptocurrency, and you've got the federal
scams included.
Exactly, and that's part of the risk inherent in these cryptocurrencies. But since October of 2020, consumers have reported losing more than $80 million to crypto investment scams. Many of the schemes promised that a celebrity associated with cryptocurrency would multiply and return any coins the consumers sent to their digital wallet. The story, by the way, based on reporting by our Dana Hull.
Love Dana. The losses to Elon Musk impersonators alone have exceeded $2 million. Such ruse have already been going on for years when Musk, the CEO, of course, of Tesla and SpaceX, hosted NBC's Saturday Night Live earlier this month, raising interest in crypto and make it even easier for crooks to find people to dupe. I mean, it's really sad. Listen, this goes back years, decades, of investors being duped over something. But listen, this is a rough one, especially when there's a mania going on in the market.
Yeah, indeed. And you look at some of the public records obtained from the FTC saying, quote, fake tweet looking like Elon Musk said in celebration of lunch today, I sent 1 Bitcoin, get 10 back. So I sent one valued at $53,500. I have photos of everything. Bottom line, they lost everything.
Listen, and if anything we have seen over the last few months, and especially with Elon Musk, he has definitely roiled the market, certainly giving a lot of support to Bitcoin initially, and then, of course, it bottoming out, or at least taking a dip here as a result of his comments, his tweets specifically. So we know that this has been a volatile market. It was a volatile market just today, Charlie.
And again, I'll recap, stating the obvious. Going to be very interesting to see how this all plays out.
Absolutely. All right, Charlie, thanks. This is Bloomberg. And join Brian Curtis and Doug Krisner live from Hong Kong and New York for Bloomberg Daybreak Asia. That's tonight at 6 p.m. Wall Street time. They're going to break down Cisco earnings. They are down in the aftermarket. That's Daybreak Asia tonight at 6 on Bloomberg Radio. It is 4:15 on Wall Street. It's time for Drive Time Traffic. We do it every 15 minutes right here on Bloomberg Radio. All right, Ed Kalegi, the sun is shining. I'm waiting for Masserhenge.
Yes.
What is the best Hudson River crossing out to New Jersey?
Right now, a rowboat, because it's a half hour and getting worse at both the Lincoln and Holland tunnels, Carol. Right now, looks like, 30 minutes over at the Holland Tunnel. Canal Street's awful. The Lincoln Tunnel, 30 minutes in building, and trying to get to the George Washington Bridge, futile at best, because the west side is heavy 50s on up, heavy in pockets from the 40s. Yes, your radio said the 40s on up over on the east side of town. Southbound the FDR, there's an accident at 14th Street. 2 lanes are blocked. Southbound FDR, an hour and 15 minutes down. From 116th Street, yeesh, more yeesh. The Cross Bronx, an hour and 10 minutes into the bridge. Back from the Bruckner Interchange. Bloomberg 11:30, 3-day weather. Tonight, partly cloudy, low 60. Thursday, and don't forget Masserhenge tonight. Thursday, partly sunny, high 80 to 85. Friday, sunny clouds, 80. And Saturday, scattered showers and storms, 85. Right now in Central Park, sunny and 85 degrees. This report sponsored by Audible. Audible Plus is everything you want to hear. Listen all you want to thousands of select originals, audiobooks, podcasts, and more. Sign up for a free Audible Plus trial at audible.com. 85 degrees, sunny in Gotham with the best ride. In and out of the city, I'm Ed Kalegi, Bloomberg 1130. Bloomberg Business Week continues.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
I'm Charlie Pellet. After the bell, we heard from Cisco Systems. Shares now down 5.6%. Cisco forecasting adjusted EPS for the fourth quarter. That guidance missing the average analyst estimate. It does see adjusted EPS in the range of 81 to 83 cents. Estimates have been for 85 cents. Bottom line here, we've got the stock lower by about 5.6%. L Brands, parent of Victoria's Secret, out with adjusted earnings per share for the first quarter that beat the average analyst estimate. Right now, shares of LV Limited Brands up by 2.5%. Tomorrow, we will be hearing from the likes of Applied Materials, up today by 2.5%. Palo Alto Networks down today by 1.3%. They report tomorrow. Stocks end of the day mixed. Treasury yields rose as minutes showed Fed officials were cautiously optimistic about the U.S. recovery at their April meeting. Today we had the S&P falling 12 points, down by about 0.3%. Dow Industrials down 164, down 0.5, have been down almost 600 points today. NASDAQ lower by 4 points, down less than 0.1%, almost unchanged on the day, but the NASDAQ 100 index eked out a gain of about 0.2%. 10-year yield 1.67%. Gold up $1.30 the ounce, up 0.1% to 1870. West Texas Intermediate crude down 3.2%, 63.39 a barrel. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, got it, Charlie. Thank you so much. You're listening to Bloomberg Business Week. Carol Masser in our Interactive Brokers studio. Well, we listen to many of our guests who are often saying automation is replacing some jobs, and that pace has definitely been exacerbated by the pandemic, often leaving those workers to find new occupations, many that require different and more advanced skills. Well, NPower is working on that, more specifically looking to move people from poverty to the middle class through tech skills training and placing people in quality jobs. That's a key distinction. Here with more on the work they are doing is Bertina Ciccarelli, CEO of NPower, on the phone from Brooklyn, and delighted to have with us our Bloomberg News New York Deputy Bureau Chief, Shartia Brantley. She's producer of our Equality Summit and our Equality Vertical here at Bloomberg on our Bloomberg Live platform. She's in our Interactive Brokers studio. But Bertina, thanks for joining us. Great to have you here with Shartia and myself. How are you? And tell me what this past year's been like.
Oh, Carol, thank you so much for having me on your show today. You know, the past year has been particularly challenging for the segment of populations we serve, largely young adults from underserved communities and veterans. But I would say the silver lining over the past year is that tech jobs continue to grow. This whole work from home movement has been fueled by technology. And there are more jobs today than there were 18 months ago for tech support, network administration, cloud computing, cybersecurity. So the future is bright for the graduates of the NPower program.
So what prompted the creation of Command Shift, where you're looking specifically at Black women and Latinx women?
So, yeah, no, I thank you for that. You know, look, this past year, we have seen women of color, Black and Latinx women in particular, be disproportionately impacted by the economic downturn. Women of color have suffered the worst drop of employment than any other segment of the population. And for the Black labor workforce in particular, we saw a 10% drop. And for Hispanic women, nearly 9%, about twice the rate of the general population. So this coalition is really focused in helping us prevent these same statistics from recurring in the next economic dislocation. And if we can pivot, women of color today who are working in service jobs, retail, restaurants, education, where many of those jobs were impacted by the pandemic, if we can introduce those women into technology roles, we think that there'll be greater resilience in their economic outcomes over time, greater stability, and a greater growth rate for their career trajectories in the years to come.
So I feel like, Bertina, we constantly see some kind of crisis and minorities, women, get disproportionately affected. And we know that falling into a hole can be very easy. Getting out of it can be very difficult. How do we provide a safety net that really does stay with us? And can we really provide the skills that keep people from falling back into poverty or falling back into a difficult place?
Yeah, I think the answer is absolutely yes. And we see that with graduates of our program every day. So really, just to step back for a moment, what we do at NPower is we're committed to advancing race and gender equity, largely in the tech sector. And we do that by offering free IT skills training and, importantly, certifications, professional development support, mentorships, and real-world experience, like I said, both for young adults and for veterans coming from low-income communities. About 81% of our graduates, nearly 1,300 graduates we serve every year, get a full-time job or choose to continue their education. So not only are we changing the life trajectories for these individuals from vulnerable communities, but we think also strengthening the overall competitiveness of U.S. businesses, really hamstrung by today's limited pool of IT talent. But to do that, right, we need to have a coalition, a willing base of employers who are committed to widening the aperture of the populations they are looking at as candidates for IT jobs. And in large part, that is the purpose of Command Shift.
Right, and Shartia, I think we talked so much about this over the past year that what we need to see companies do is kind of widen their pool when they are looking for applicants.
I totally agree. Bertina, I do have one question, though. You offer free training and upskilling, but are you assisting participants with childcare needs, for example?
And Bertina, we have about 30 seconds, and then we are going to do a little bit of news, and we'll come back.
Sure. Yes, the short answer is yes. We find that the social support services that we provide our students are absolutely essential. So we could remove those barriers and provide access to childcare, or in some cases, housing and food security, so they have the supports necessary to be able to successfully complete the program and get a job.
It's such an important aspect. We're going to come back with Bertina Ciccarelli. She's CEO of NPower. She is with us along with our Bloomberg News New York Deputy Bureau Chief, Shartia Brantley. And Shartia, that's such a good point, right? Because people want to maybe skill up, if you will, or go out for a job, but if they're watching their kids, it's going to be difficult.
Very. In this virtual learning environment we find ourselves in right now.
Exactly. We're going to continue our conversation in just a moment. You're listening to
Live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
We're going to get back to our interview. We're talking with Bertina Ciccarelli, CEO of NPower, talking about bringing people out of poverty, finding them jobs, tech jobs, and giving them the skills necessary to do that. We'll get back to that conversation in just a moment. In the meantime, let's get back to your top business stories. And Charlie just saw a headline involving Waymo.
Lots going on. Let's begin with that Waymo red headline on the Bloomberg Professional Service. Waymo said to be discussing raising as much as $4 billion. The Alphabet company also debating a possible future public listing. Cisco Systems out with adjusted EPS for the fourth quarter. That guidance missed the average analyst estimate. Cisco after hours down by 6%. L Brands, parent of Victoria's Secret, reporting adjusted EPS for the first quarter that beat the average analyst estimate. Watching shares now lower by about 2%. Coinbase Global closed at a record low after a wild trading session that saw the price of Bitcoin swing by about $10,000. Coinbase down 5.9% today. Bitcoin tumbling by 9.75%. Website hosting service Squarespace falling as much as 12.7% today in its trading debut. The Dow, the S&P, NASDAQ all lower today. We saw the S&P 500 index down 12, down 0.3%. The Dow down 164, down 0.5. Again, the S&P down 0.3. NASDAQ lower little change, down 4. NASDAQ 100 index eked out a gain. 10-year yield 1.67%. Gold right now at $18.70 the ounce, up 55 cents. West Texas Intermediate crude down 3.2%, $63.38 a barrel. Kathy Wood is keeping the faith, even in the face of Bitcoin's massive plunge. Today, the head of ARK Investment Management said in an interview on Bloomberg Television she still expects the cryptocurrency to reach a price of $500,000. Again, to put that number in context, Bitcoin right now $39,109. And in that interview with our Carol Masser, Wood was asked about systemic implications of today's sell-off in crypto.
In the case of Square and Tesla, they're between 5 and 8% of their cash is in Bitcoin. So that's no cause for concern. I mean, think about it. We were worried that Tesla would run out of cash. Of course, ARK was not worried, but the world was worried 2 years ago that it would run out of cash. It has so much cash now that it has the luxury to put 5 to 8% in Bitcoin.
And again, today we saw Tesla shares tumble 2.5%, Square lower by 1.5%. Bitcoin, worth repeating, down 9.9%. Again, recapping S&P down 0.3. I'm Charlie Pellet. That's a Bloomberg Business Watch.
Got it, Charlie. Thank you so much for that update. It is a busy, busy Wednesday. Let's get back to our guest. Bertina Ciccarelli is with us, still with us, CEO of NPower, on the phone in Brooklyn. Still with me in our Interactive Broker studio is Bloomberg News New York Deputy Bureau Chief Shartia Brantley. And we're talking about bringing poverty to the middle class, doing skills retraining, specifically in technology, and placing people in quality jobs. Bertina, thanks for staying with us. So let's talk about it. I was just pulling up a Bloomberg story. The number of available positions that are out there for workers are more than 8 million, actually increased to 8 million during the most recent month. I mean, we know that there are still millions of people out of work. How do we kind of really chip away at that number? Are you, and it was something that actually Shartia was mentioning to me in the break, we were talking about, are you guys setting some targets out there in terms of retraining, reskilling workers?
Yeah, absolutely. And in fact, I think in this pandemic, we've observed that we can offer our training program in a hybrid model, an online model that allows us to reach far more people. But if I think about women of color in particular, the target of our coalition, what's so interesting is that less than 5% of the U.S. tech workforce is comprised of Black, Latinx, and Indigenous women, yet they represent over 20% of the population. So, our first priority is to correct that limitation that we have right now, because the more women of color we can get into the tech workforce, the more we can change those numbers and ensure that we've got viable population of workers to take these great jobs. So that's number one, really on our agenda with Command Shift, the coalition we announced today.
Bertina, I have a question. Tech can be very intimidating. And if you are in a non-traditional field, how are you encouraging women to pursue careers in tech?
Well, it's a matter of encouraging women to do that and also encouraging companies to think differently about their hiring practices. And, one of the things that we have seen, particularly with women of color who are anywhere between, say, 18 and 25, that there's a perception that technology is a monolithic sector that's all about bro culture and coding. So part of our job is to really expose women to the literally hundreds of professions that require technology skills and the job categories that could be high paying, high growth, and in a range of industries, right? Every company today is a tech company, and every company requires tech skills. So that's really the first step, is to overcome a certain perception about what tech is and where they might fit in that world of technology.
I have another question. How does the corporate partners, how will they work to ensure that people who are placed via the Command Shift training program feel like they belong in the organization? You mentioned the whole notion of bro culture. How do we ensure that Black and Latinx women feel like they are a part of the team once placed?
Yeah, that's a really important issue. I will say that we have seen some really good strides in companies hiring for diversity, but where we still see some limitations hits on that very issue, which is managing for assimilation once they've hired for diversity. And so the challenge is that if you have a really bright person who wants to bring their full self to the job, you've got a woman of color who has a unique worldview, set of experiences, perspectives, but the assimilation is such that there's an expectation they're going to somehow fit in to a culture where they might not feel they belong. And that just distills out all of the advantages of what diversity brings to problem solving and business results. So what I see great companies doing is establishing well-structured formal mentoring programs that really encourage and build a culture of belonging where men and women both from non-traditional backgrounds who are underrepresented in tech feel as though they can bring everything that they have to the conversation.
And I was going to say that they've got to start setting up these individuals, people of color, along the supply chain in the tech world, and so that individuals have mentors that basically they can see, or role models that are out there. Bertina, I hope we can continue this conversation going forward. It's an important one, and it needs to continue to be discussed. Bertina Ciccarelli, she is the CEO of NPower, on the phone from Brooklyn. She's been joining us with our Bloomberg News New York Deputy Bureau Chief, Shortia Brantley. Shortia, thank you so much.
Thank you.
And our thanks to Bertina as well. All right, you're listening to Bloomberg Business Week. Let's get another check on world and national news. For that, Nancy Lyons. She's in the Bloomberg 99.1 newsroom in the nation's capital. Hey, Nance.
Hey there, Carol. Powerful testimony today on Capitol Hill from survivors of the 1921 race massacre that took place in Tulsa, Oklahoma. A thriving African-American community known as Greenwood was attacked by an angry mob of white residents, with estimates that as many as 300 Black residents were killed. Viola Fletcher is 107 years old and has vivid memories of it all.
I still see Black men being shot, Black bodies lying in the street. I still smell smoke and see fire. I still see Black businesses being burned. I still hear airplanes flying overhead. I hear the screams. I have lived through the massacre every day.
Fletcher is one of the lead plaintiffs in a reparations lawsuit that was filed last year against the city of Tulsa and the state of Oklahoma. Well, as the Biden administration releases hundreds of billions of dollars in financial relief for state and local governments, it looks like some of those municipalities might not really need the funds. Bloomberg's Amy Morris has more from Washington.
Turns out there's a divide between official Washington and state capitals. Federal officials are making the case for an unprecedented financial rescue, but many states saw a surprising financial turnaround. Now governors have to decide if they pump those billions back into their economies or alleviate the inequalities that the pandemic highlighted. Not all of the federal money needs to be spent right away. State and local governments are able to use their allotments through 2024. In Washington, I'm Amy Morris, Bloomberg Radio.
Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries.
All week long, as you know, Bloomberg Live hosting the Business Week, which has been going hand in hand with the new how-to issue of Bloomberg Business Week magazine. Today, the vertical was all about finance and the economy. And as part of it, former Major League Baseball star, all-star, and SPAC investor Alex Rodriguez saying recent regulatory scrutiny and investor skepticism surrounding SPAC, special purpose acquisition companies, is clearing the way for better deals. The A-Rod Corp chairman and CEO spoke to Bloomberg's Jason Kelly of Quick Take at the Bloomberg Business Week conference. Check it out.
Everywhere you turn, including a recent cover of Business Week, there are both like big questions about, but also increasingly still big opportunities in the SPAC world. Tell me about your experience there.
Yeah, we like where the space is right now because I think what's happened is you've basically eliminated a lot of the amateur players that just want to participate in the space because it's hot. There's real institutional offices that you need. You need to do real due diligence, and there's a lot of good companies out there that are SPAC worthy, but it's really kind of leveled out the playing field a little bit. The reason why we love SPAC is, number one, I have a wonderful partner in Hamanchu and Antar. It's a 50-50 partnership. They have an incredible track record. They returned north of 40% in their hedge fund over the last 3 years, 58% last year. And why we came together is we feel that ARC is tailor-made for SPACs. I mean, we have more deal flow than we can, they're coming out of our ears. But the barrier to entry has often been the capital. And with the SPAC, we have the public money and we have the deal flow. And collectively with Antara, we have the back office to bring the best opportunities to these companies and then help them go from good to great by bringing in our expertise, our market share, and how to really tell the story. A lot like we've done with companies like Petros Pace, Hims & Hers, Saunders, companies in our portfolio that either have gone public or soon will be going public.
And that's A-Rod Corp chairman and CEO Alex Rodriguez speaking to Jason Kelly. He's also a SPAC investor. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
Cisco Systems, the biggest provider of equipment that runs the internet, delivered an upbeat revenue forecast, bolstered by a rebound in corporate spending on computer networks, but shares are slipping. Cisco right now down by about 6%. The company said higher costs for components to meet that rising demand will erode profitability. Wild day for Bitcoin, whipsawing investors with a same-day plunge and rally of 30%. Bitcoin right now down 10.9%, 38,585 on Bitcoin. Stocks ended the day mixed, with the S&P down 12, a drop of 0.3%. Treasury yields rose as minutes showed Fed officials were cautiously optimistic about the U.S. recovery at their April meeting. The Dow down 164, down 0.5%. Nasdaq 100 index up 0.1%. Nasdaq Composite Index lower little change, down by 4 points, down less than 0.1%. 10-year yield on this Fed Wednesday, 1.67%. Gold little change now at $18.70 the ounce. West Texas Intermediate crude down 3.2%, 63.40 for a barrel of WTI. Recapping, S&P lower by 12, down 0.3. I'm Charlie Pellet. That's a Bloomberg Business Flash.
All right, got it, Charlie. Thank you so much for the update. So it's definitely been a jam-packed day. So much going on. So finishing up with something we've also been keeping an eye on throughout the pandemic and really post-pandemic world. Maybe you are as well. And you might have seen a recent story in the New York Times about how Google is redefining its offices once again. And we're seeing more broadly how the built environment at home, at work is changing around us. So let's get into it, because we know our next guest has some thoughts on it. He is Sam Cochran. He's Global Editorial Director at Architectural Digest, joining us once again on the phone from Westchester, New York. Sam, how's it going?
It's going very well. Thank you very much. How are you?
I'm doing well. And we talked to you a little while back here. I think it was last May. We talked about how COVID was going to kind of forever change how our homes and workplaces will be built. And I have to say, I am looking at my home a little differently. Outside space became so more, important. I think we're thinking about, I want places where I can easily work out at home if I don't already have a home gym.
Much, yeah.
So tell us a little bit about how your thinking has evolved over the last few months, especially too as the world reopens and we're embracing going back to some of the normal places like gyms and other places that we used to go to.
Well, obviously a lot has changed since you and I spoke last May. I think it was really tempting throughout the pandemic to sort of imagine this kind of dramatic transformation to the built environment. And I think what we've seen play out is actually sort of more innovative and often improvised changes to spaces that already exist. And we've seen this in our own homes, as you allude to, as we convert extra bedrooms into gyms or to home offices. And we've seen this at an urban scale where, entire streets have been converted from busy thoroughfares into pedestrian-only, playgrounds, for lack of a better word. And I think that, going forward, we're really going to see that continue, this sort of spirit of creativity and adaptive reuse as we reconsider the spaces that have long existed around us.
What does it mean for office environments? And I think about my own office environment. We've got a lot more people back. It's kind of going back to the way it was. There's still certainly some safety things in place, no doubt about it. But, we have an open office environment, kind of love it. Lots of light, lots of glass, big open spaces. I think there was some thinking that, wait a minute, that's not going to work anymore in a pandemic world. But are we really going to get rid of that?
Yeah, you're absolutely right. There's been a lot of kind of predictions about the end of the open office. And I think I would agree with you that I don't see the open office going away entirely. I think with vaccinations and with science sort of catching up to the conversation, what we will see are sort of thoughtful tweaks, again, to the spaces that exist. People will be spaced out more. There'll be partitions. There'll be hand sanitizer stations and wayfinding sort of signage to guide people as they move through a space. I think the larger sort of catalyst, more so than the pandemic, will be the new realities of working from home. I mean, as more of us have the freedom to have hybrid work weeks, where we're in the office sometimes, at home other times, that will mean changes to the way we use our offices, and there'll have to be new sort of spaces to sort of accommodate for the comings and goings of employees in often unpredictable ways. And I think that, from a design perspective, there will be, a sort of need to create a kind of residential feel, if you will, to certain spaces in our offices to sort of lure people off their couches back to the city, back to their sort of communal workspace.
Hey, I don't know if you saw that Google story though, and they are someone who have rethought workspaces, not just this time around, but before, and they've got outside space. They have something they call campfire. They've got people inside a building, but they're sitting in a circle, and there's large vertical screens so that for those who are maybe working from another location or still working from home, they kind of have the same visual presence as somebody who's there in person. So how are we, how are these things going to evolve and to become the norm, do you think?
Yeah, I think, I imagine the sort of changes that will be made as existing on a spectrum. And I think obviously Google exists at the far end of that spectrum. They have the technological know-how and the sort of budgetary might, shall we say, to implement some radical changes and to do so very quickly. Obviously, technology is going to catch up with our new way of working, incrementally over time. These kind of new interfaces that you described that allow for meetings where some people are virtual and some people are in person. I think it will be very exciting to see how that technology develops, and we'll all be looking to Google to see what they're up to.
Yeah, no, well, it's interesting too, because some of the things they talk about is if you need some privacy, there's a robot that apparently it's got sensors to detect its surroundings, and they come over and they inflate a translucent cellophane balloon wall to keep prying eyes away. So basically, if you're next to somebody, like it kind of inflates a wall. It's pretty interesting, and it's very flexible, right? And it allows us to use maybe potentially a space in different ways. What happens to major cities and all these big office buildings? I know everybody was saying they're not going to be in demand anymore, but how do you see it? What are you hearing?
I think I always bet on the side of density, particularly, in the conversation of American cities. When you think about the sort of psychology that unites us, I think we as a people sort of want to gather, and I think people will be excited to return to work in a hybrid way, in whatever sort of fashion suits their lifestyles. And, I really see this moment as a kind of opportunity for course correction. People whose lifestyles and whose work-life balance, I should specify, have become sort of unsustainable. We all are going to have the freedom to do things that work for us. And in terms of the sort of forecast for places like Midtown, Manhattan, and neighborhoods and districts where we may soon find a surplus of commercial office space, again, I really see this as an opportunity to sort of think about what we need as cities and how to better serve all residents. So yeah, I'm erring on the side of hopeful.
I like what you said. I always bet on the side of density. I'm a city slicker too, and I think I tend to do that as well. Hey, Sam, good to check in with you, and look forward to doing it again in the future. Sam Cochran, he's Global Editorial Director at Architectural Digest, on the phone from Westchester, New York. Folks, I am watching shares of Cisco in the after hours, down about 6.6%. Company talking about the fourth quarter revenue up 6 to 8%. The estimate out there is 5.6% of an increase. But the CEO specifically, saying his great sense of optimism for the future. We're talking about the CEO, Chuck Robbins, talking there. And he's also talking about supply issues to linger to the end of 2020. Locked in pricing, supply of components. He's done that. But the supply chain challenges, this is something we've heard from a lot of CEOs. He expects, this is the CFO, of Cisco saying this, that the supply chain challenges will continue. Again, Cisco, one of the names we're going to watch into the Thursday trade. What a day, watching the big swings in crypto, watching the Fed minutes. Can't wait to see what tomorrow brings. You're listening to Bloomberg Business Week from our team. Have a great, safe evening.
innovation, money, and power collide. In Silicon Valley and beyond, this is Bloomberg Technology with Emily Chang.
In San Francisco, and this is Bloomberg Technology. Coming up in the next hour, a stomach-churning day for crypto investors. Bitcoin plummeting 31% in the morning, then rallying 33% in the afternoon. Multiple crypto exchanges reporting technical issues. We will have all of the action. Plus, a month ago, she predicted Bitcoin would go to $500,000. We're going to hear what Cathie Wood's thinking now. Plus, insight from Nick Carter, who runs the crypto data provider Coinmetrics, which counts Goldman Sachs among its investors. And AMD is one of the biggest tech turnaround stories of our time. Under CEO Lisa Su, the company's market value is now more than $90 billion, up from just over $2 billion at the end of 2014. We'll bring you my latest Bloomberg Studio 1.0 with Lisa Su about the company's comeback and the road out of the chip shortage. First up, though, what else but Bitcoin? In the last 2 weeks, as much as $1 trillion in market value has evaporated. In the last 24 hours, more than 775,000 traders have had their accounts liquidated, equal to $8.6 billion worth of crypto. That according to Bybit.com. Cryptocurrency exposed shares, including Coinbase, Marathon Digital, Riot Blockchain, all falling more than 6% after Bitcoin touched its lowest level since January before that big bounce back. Some exchanges also reporting technical issues. It all made for a very vocal day right here on Bloomberg Television.
We go through soul-searching times like this.
I think people in the industry have come to make their peace with the volatility, albeit we've certainly had quite a ride over the last 24 hours.
Imagine roads with no speed limits, right? I mean, nobody knows if you should drive fast or slow, and so it's super dangerous. And then you have a speed limit, and everybody knows what the rules are, and they can then adjust their behavior.
Right now, it's not at a scale, and it doesn't have a reach into the economy that has systemic implications for us.
The comments from China clearly had an impact. I don't know that there was anything new there.
It was actually just a rehashing of an announcement that had also been made in 2017. It's really a non-material event in our view.
So was it a non-material event in the end? Let's bring in Bloomberg's Joe Weisenthal, co-host of What'd You Miss, and our own Ed Ludlow. Ed, I want to start with you. Obviously, the volume here is just insane. Walk us through the biggest slides and the biggest comebacks of the day.
Yeah, so the biggest move in terms of volatility was Bitcoin, a drop of in excess of 30%, a rebound in excess of 30%. And in that rebound, what we saw is basically the cult of celebrity and big name investors coming out in force. With every tweet, every public appearance, there seemed to be confidence coming back into Bitcoin. It was really interesting because if you look at other cryptocurrencies that were also declining, they didn't experience the same rebound that Bitcoin did. And the other thing to note is that this was a kind of off-day risk assets moving in correlation with Bitcoin, which is something that's been really hard to understand in recent months. We had a pretty heavy drop at the equity market open, and then a drop later on the day, which was closely tied to Fed minutes. But in other words, investors looking at cryptocurrencies, as your guests pointed out in that sequence of comments there, a lot going on in terms of the commentary, some of it Elon Musk, but also China, the People's Bank of China, the central bank, saying institutions should not allow cryptocurrencies as legitimate forms of payment.
Right. The PBOC, though, reiterating a comment it's made previously, there was nothing necessarily new there. I mean, Joe, if there's one reason you could pinpoint for today's sell-off, is there one, or is there just a lot of things?
No, I think people should always be skeptical when it comes to crypto of telling too neat of a story between some news event and some move. I mean, first of all, this is crypto, so we have times like this all the time, and these drawdowns are really large, and this was a large one by crypto standards, but it was hardly an unprecedented one, or even one that really will stand out that much in history. You see that chart there? The chart's been kind of weak. I think it's lost momentum. It was